Hey there, Market Mindset listeners. It's your host, Big Money Mike, and welcome back to another exciting episode. Today, we're diving into the latest market news that's been making waves, and I've got some compelling insights and predictions to share with you. First off, let's talk about BGM Group Limited, which just announced a significant acquisition that could be a game changer in the AI space. BGM is acquiring Xingdao Intelligent and YD Network, two companies that bring a wealth of expertise in embodied service robots and AI-driven stock trading. Xingdao Intelligent, with its over 300 patents in service robotics, is set to enhance BGM's capabilities in integrating hardware and software, completing that crucial perception understanding execution cycle in real-world applications. This move positions BGM to be a major player in the AI industry, and I think it's definitely worth keeping an eye on. Moving on to another AI powerhouse, C3.ai had a stellar fiscal Q4, exceeding expectations on both revenue and adjusted earnings. Their partnership with Baker Hughes has been extended for another 3 years, which is a big deal given the success they've seen so far, with over $500 million in revenue generated together. Tom Siebel, C3.ai's founder and CEO, highlighted the strategic importance of this alliance and how it's expanding into major energy and chemical companies. This kind of stability and growth potential makes C3.ai a stock that could continue to perform well in the AI-driven market. Now let's shift gears to Veeva Systems, which just reported its best first quarter ever. The company saw a 31.3% increase in adjusted earnings per share and a 17% rise in revenue, beating estimates across the board. Veeva's subscription services segment was particularly strong, with an 18.9% year-over-year increase. This kind of performance indicates that Veeva is on a solid growth trajectory, and I recommend keeping Veeva on your radar. In other news, the ongoing U.S.-China trade talks are still a bit stalled, according to Treasury Secretary Scott Bessent. This uncertainty is something investors need to be aware of, especially with the legal battles over Trump's tariffs adding to the mix. Jim Cramer recently pointed out that the judiciary's potential to invalidate these tariffs could actually be a blessing in disguise, as it might force a more meaningful resolution to the trade disputes. However, until then, it's a wild card that could impact market sentiment. Speaking of market sentiment, let's look at some of the retail sector news. Gap Inc. sales have stalled, and the company is feeling the pinch from additional costs due to tariffs. On the other hand, Costco is showing resilience with an 8% year-over-year sales gain despite the challenges posed by tariffs. Costco's ability to negotiate better prices with suppliers and its focus on bulk discounts could make it a beneficiary of unpredictable tariff policies. Dell also made headlines with its impressive earnings outlook, driven by a $14 billion-plus AI backlog and expectations to ship $7 billion worth of AI servers this quarter. This kind of demand for AI infrastructure is a clear indicator of the sector's growth potential. As we look ahead to May 31st, 2025, here are my market predictions. The S&P 500 and Dow Jones are likely to see some volatility due to the ongoing tariff uncertainties and geopolitical tensions. However, given the strong performance of tech and AI-driven stocks, I believe the Nasdaq Composite could continue its upward trend. The market is also likely to react positively to any signs of progress in the U.S.-China trade talks or any favorable court rulings on the tariff front. In conclusion, if you're looking for a stock recommendation, I'd suggest taking a closer look at Veeva. Veeva Systems' robust Q1 performance and its strong subscription services segment make it an attractive option in the current market climate. That's all for today, folks. Stay informed, stay vigilant, and always keep your market mindset sharp. Until next time, happy trading and stay wealthy.